Good morning, everybody. Hey, welcome to Friday. It is Friday, March 11th, and I hope that your week is going well. We've got yesterday, not such a good day on Wall Street, but maybe today we can bounce back a little bit. We'll look at that and more in just a moment when we get Dave on the line. Before we do that, though, let's just remember there's only one thing that you and I have any control over. We can't control Russia or Ukraine or what's happening over there. We can't even control what's happening in Washington, D.C. or the economy or the markets. However, there's one thing you can control, and that's how much risk you have in your current portfolio. The problem is if you don't know how much risk you have, how do you know that you're in the right place for this circumstance we're in right now? That's why we developed the Core Retirement Design, so that we can help you design the retirement you always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement design. With that, we got Dave coming up next.
7 tree there. I am Morning Dave. It's 8:41. 19 here before 9 time. Check in and see what's going on in Wall Street this morning. Yesterday was kind of interesting. It was an off day, but given the size of the increase we had the day before, we're actually across 48 hours net positive, and things ain't looking too bad this morning either. Let's try to flesh everything out with Phillip Statler from Statler Financial Services. He's on the phone this morning. Phillip, how are you today?
Hey, I'm doing well. Happy Friday. It is the end of a very volatile week. And the question is, how can we end up? Can we end up green, or will it still be red?
I'm kind of hoping for green. Yesterday it was red. I was mentioning that, given the big bump that we had up the day before, 112 down on the Dow, 18.5 down on the S&P, and 126 down on the NASDAQ, we only gave back about maybe half to a third of what we gained the day before. I call that a 2-day net positive, wouldn't you?
Absolutely would. And so it would be nice if we could finish off this week with an uptick. I don't know that we can get positive for the week, but it sure would be nice to end up maybe a little pink instead of where we're at right now.
Yeah, I agree with you on that. We've kind of got a war of projections going on this morning between two different parties, both of whom supposedly command some respect. Goldman Sachs put out a statement this morning saying they're cutting their projection for the United States gross domestic product forecast a full point below the consensus. Remember, we got the first look at it about a week or so ago, and now they're saying that the odds of a recession off of this little tiff that we're having with Russia over their war in the Ukraine, they're saying the odds of a recession are as high as 35%, which isn't good news. So Janet Yellen, the Treasury Secretary and former chairman of the Fed, says, yeah, we're going to get some crummy inflation for this year, but she says, heck no, no recession. So depends upon who you want to believe what the future looks like, doesn't it?
Well, that's right. And let's face it, it's not on who you believe. It's what happens between now and the end of the year, right? I mean, that's the proof. And it doesn't matter what anybody says is going to happen. It's going to be when we get to the end of the year and look backwards, what did happen and how painful is it going to be in either case?
Absolutely. I mean, the inflation could be out of control if Yellen's right. If we get inflation under control, and the Federal Reserve is going to start their measures on that next week when they meet, we could be looking at a recession. So it could go, like you said, either way. And it makes it advisable for anybody looking at retirement to be planning on stabilizing things to the point where you're kind of insulated from either eventuality.
That's right, man. Especially if you are anywhere 5 years out from retirement, man, this is some tumultuous times for you. And you need to make sure you've got the risk right within your portfolio. There's too much risk could make you work a couple more years, actually.
Actually, very well could, yeah. Happened to me after the '08 recession, so I get it completely. Other things going on today, we've got a very slow day as far as macro news is concerned. The economy is going to get some sort of a bump off of the University of Michigan consumer sentiment number, but that doesn't come out until 10 a.m. We've got the Senate passing the budget, the extension onto the federal ability to borrow money. Every year we talk about that. Every few months they get to the point and we play chicken with it up until the final dog is hung. And We didn't even notice it in the process of Ukraine. Isn't it amazing how the market doesn't get obsessed over dumb stuff when they've got other things to worry about?
Well, that definitely seems to be the case, doesn't it? Because otherwise, you and I would have been talking about it all week long. But who even knew it was up for a vote?
Yeah, I've always been impatient with the market reaction to the thing, only on the grounds that we all know that they're going to extend the debt ceiling. We all know they're going to end up extending the ability to spend money. They're going to wait until the 11th hour every time to do it. This time we were distracted by the Ukrainian situation, rightfully so. The Congress managed to do it. Markets didn't even notice. It's amazing how it really is kind of a study in abnormal psychology. It's what we get excited by at any given time that drives the markets.
That's right. You know, it is an emotional up and down, and that's our emotions do a lot of the controlling of what's happening in the marketplace.
Absolutely. The way the war is going over in Ukraine, we're going to have some new sanctions and some new measures clamped down on Russia today. And you're saying it basically boils down to a full economic boycott of the country now.
That seemed to be what the headline said that I saw. And unfortunately, I can't put my hands back on it. I saw it earlier this morning.
The one thing I know that is going to happen is we're going to have a formal redesignation today, removing Russia from our most favored nation trading status list, which kind of struck me as a fait accompli. We're not buying their oil. We're not talking to their banks. That sounds like pretty much not most favored nation to begin with, but redesignating it does make a difference in terms of tariff protection and the like as well. So if we cut off trade completely, well, okay, fine. Vlad, have some fun and try to sell your oil elsewhere, I guess, right?
Well, yeah, I mean, and obviously that's still going to put pressure on us. I mean, I don't know, there's a lot of stuff we do get from Russia, but oil is definitely one of them.
Absolutely. It's the primary export of Russia. It's about the only thing they've got in abundance. And I found it kind of interesting. You and I were talking before we went on the air. It looks like we're actually coping, and the world is coping with the interruption of the flow coming out of Russia, because the oil prices are actually settling down a little bit, aren't they?
They are, surprisingly. They've dropped significantly down below 110, just slightly above $105 a barrel right now.
And while it may be kind of culture shock for us to be able to say we're happy at $105 a barrel oil, given what we were thinking about earlier, the possibility of it skyrocketing up to 150 or 200, that's probably accounting for some of the upticks we're seeing on the pre-market trading today on the stock markets.
I think so. I mean, that's, oil has been one of the things that's been in everybody's eyesight, and it's been an indicator, as well as interest rates on the other side. So I think both those things have given us an indication. And right now we've got a lot of green ink on the future side.
And it does sound a little bit like it's almost working in an opposite relationship with the price of oil. Price of oil goes down by a tenth, the markets go up, which makes sense given how integral it is to so many of the companies' income statements. The price of energy can really screw up a stock.
That's right. It absolutely can. I mean, it adds to the cost of everything. And you and I and everybody out there is going to feel it more and more as we progress through this next quarter.
Understood. Speaking of the quarter ahead, we're looking at the quarter behind as well, kind of on the tail end of earnings season. And we got a few reports out. One of them is a high-tech firm that could be kind of interesting to watch. Oracle reported, I gather.
Oracle did report. They missed their earnings projections by about 5 cents a share. However, revenue was in line with what they forecasted. They continue to see a good shifting towards their cloud-based computing system. As a matter of fact, their revenue from cloud computing increased 24% from a year ago. So it all sounds nice and good, except for they missed on earnings. So they're down about 1.5 points right now from where they closed yesterday. I had a hard time finding any real winners today. I know it was tough. I'm going to give you my only winner that I've got right now.
That would be,
Dave, you could maybe benefit from this store, and it's local. Ulta Beauty,
mm-hmm.
It might help you out a little bit. I know you're on the radio, so people don't see you a lot, but the Ulta Beauty had a really good quarter. They had better than expected profit and revenue. Same store sales, get this, beat forecast. They were up 21.4% increase over prior year. So good news for that. And they announced a $2 billion share buyback. So they're the only thing I have green right now on the earnings front, up 2%.
Cool. I'm glad to hear a store with a local location doing well. It's always struck me, premium makeup and fragrance stores always struck me as kind of a marginal business category, but they've done well here, I know, and I'm glad to hear nationally they are.
Yep, definitely have. All right, so I got just a couple more for you. DocuSign came out. They earned 48 cents a share. That was 1 cent above what was estimated. Revenue was above forecast. However, they're getting just beat up this morning in the pre-market. They issued weaker than expected guidance for the full year, not just the quarter, but for the full year. And Dave, they are paying a price today. They are down 17.75% right now.
Holy crud! What have they got? New competition in the category or something?
I don't know, but I'm looking at some numbers, and that's going to be a new 52-week low. And get this range, the 52-week range. Right now, it's trading at $77.10. It's been as high as $314.
Woof.
Yeah, I think if you bought it back then.
That's kind of a range that sounds like an Amazon stock split almost, doesn't it?
Yeah, that's just not real good. So I mean,
no.
and we're talking about just the end of last year, it was in 250 range. So it's having some difficult times right now. So the two other ones I have are not common names. Blink Charging, though, is something that I think could have some benefit. It is a electronic vehicle charging equipment maker. And with everything going the way it is in infrastructure, they could benefit from that. However, this last quarter, they had a lot bigger loss than was expected. Their sales did beat expectations. They're seeing a lot of strong momentum because of everything that's going on, but they're still trading down this morning 4.5%.
I got to believe they've got to be saying nice things about guidance, given the fact that even the government is yelling at us about electric vehicles again.
Yeah, and I think, because they're on the infrastructure front, and some of that stuff I think got passed in the infrastructure bill, so I'm thinking they should see some benefit around that eventually.
I would hope.
The last one I have for you is one I've never heard of. I'm sure it's out there somewhere, but it's called Zumas, the streetwear and action apparel company. They're getting killed this morning. Yeah, they fell short on revenue and earnings. Their guidance was shy of what everybody expected. You can imagine they're getting killed this morning, down 15%, almost at their 52-week low.
Well, poop. We're going to have to go to the futures in order to get some good news because the indexes are good. Yesterday was a fractionally off day compared to the day before. We gave back some of what we gained the day before, but it was on balance across 2 days, an up period here. See if we can keep it going. 45 minutes before we open, Phillip, what are the markets doing?
So right now, Dave, we've got a good bit of green ink. If I can get my computer go there. There we go. All right, so we got the Dow up 0.75%. That's $256. Get this: the S&P 500 is up 0.9%, $38. The Nasdaq 100 up 1.2%, or $163. So everything's looking pretty good on that front. Even on the commodities front, not bad. I mean, silver is down 1.6%, below $26 an ounce again, and then gold is down 1.7%, again down below 2,000 to 1965 an ounce. Crude oil, it just ticked up just a little bit. It's flat right now at $106 a barrel.
Which still is a lot better than the worst case scenario we were being threatened with earlier in the week. So I'm not even, did you ever think you'd find yourself happy with $105, $106 a barrel oil?
No, and I'm hoping it's temporary. I'm hoping I'm going to get happier, at like 90 or 85.
Yeah, and which I'd never thought I'd be happy with either. Overseas markets, the Asian Rim market was mixed at the close today. Japan was off considerably, but the mainland Chinese markets were up. Over in Europe, mostly up. France has some internal issues that are going on, so they're off by about a quarter, but Germany is bouncing back nicely. They're up by over 3% midway through their day. Getting a hold of somebody to try to control all this topsy-turvy stuff we got going on. The government and the brokerage houses are arguing about what's going to happen in the economy. economy, I got to stay stable one way or the other, no matter what happens. How do I find you to get a look at my accounts?
Dave, you know what? That's why we developed the core retirement design to help folks design the retirement they always dreamed of and watching out for how much risk they're taking on. Give us a call at 863-382-0037 to walk through our core retirement design. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here on Monday morning. Phillip, thank you so much. You have a good day, and we'll catch you tomorrow. Or on Monday, right?
On Monday, that's right. Yeah. I don't think we'll have a report tomorrow.
Yeah, you and I both get off easy on Saturdays. Thank you much. Have a good weekend, Phillip.
All right, you too.
Bye-bye. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I hope you have a great weekend, and I hope you'll join us again on Monday. Until then, have a great one. Bye now.